Good morning, good afternoon, good night. Welcome back to another Schema Scalper video. In today's video, we are going to be looking at the trade I took that passed my phase 2 funding pips account. This is trade 1, trade 2 got me just over 5%, so 5.5%. 3,000 plus 2,450 is 5.4% because of the commissions, just under 5.4%. And I'm going to show you exactly how I did it. So going into the chart, okay, I'm going to erase this and I'm going to explain why I'm using that. I'm going to mark up another area. Okay, so we got 4 p.m. to 8 p.m., 8 p.m. to midnight. Now in these two ranges, what I'm looking for is a consolidation. So moves up and down, taking out highs and lows. It can be a large range taking out highs and lows, or it can be a small range that doesn't take out highs and lows. You need to go look at this for yourself and see how you can identify that quicker. So here, for instance, between 4 to 8, there was a small range. It didn't take out many highs and lows, but the range was so small that I could use that range for projections. Between 8 and midnight, 8 and 12, was a larger range, but you can see it took out only highs. This low that was made initially stayed intact, and this is all on a 15-minute chart. So it took out the high without taking out the low, took out another high without taking out the low, and eventually it did take out the low, but there was only one low taken, and we've taken 1, 2, 3, 4 highs, 4 swing highs without any lows being taken, right? So I used this 4 p.m. sorry, my bad. Yeah, 4 p.m. to 8 p.m. time. I'll erase this one, and this is the firm I'm using. The lowest low, which is here, till the highest high. I'm gonna erase this so that you can see the price action better. I'll change that. The highest high, and you can see the time there is 8 o'clock, 8 p.m. and the lowest low, you can see the time there is 5 o'clock, 5 p.m. 4 p.m. there was nothing that made a before 5 p.m. there was nothing that made a lower low, unless you're counting this, which is outside of our time range. So okay, now we've got our range, right? If the first range from 4 till 8 is trending, and the second range from 8 till 12 is trending, you take both ranges, and in a future video I'll use that because the market's most likely going to do that in the future, and I'll show you how to use that exactly. So now we've got the first range, right? This is all before midnight, before the midnight candle, before the quarter past midnight candle is formed. So I'll just make that as the divider, and I'll bring that back, or I'll leave it there. Actually, that's a good point to put it. And now I'm gonna mark out the midnight open for New York time. So it's a red candle. I'm marking out the top of the red candle, top of the body, extend it into the time, and I usually extend it till midnight next day, right? There are times when I don't use this and I just use a horizontal ray. So horizontal ray, like if I'm in a rush and I'm using my phone, maybe trading view on my phone instead of a laptop, use a horizontal ray and it just pulls a straight line for me, okay? But I'm using the laptop, so I'm pressing down the shift key and then just drawing the line across. So now I'm drawing out these levels, 1, 2, and you guys are going to be looking at it like, hey, this is all hindsight, you didn't see this in real time. But go look at my other videos. I'm doing the exact same thing every day. It's just rinse and repeat. 1, 2 and 3. So it's 1 range expansion up, 2 range expansion up, and 3 range expansion up. And then I'm going to do the same for the bottom. This is the 1 range expansion down, 2nd range expansion down, and this is the 3rd range expansion down. Okay, and now that's all being done at midnight opening price. So once I have this horizontal line in, I'm putting all of these, this vertical line in. 15 minutes after midnight, I'm putting in all of these lines, and then I can erase the vertical line. So now I've got midnight opening price. Let me actually mark that so it's easy for everyone. Midnight open price. So we've got midnight open price. We've got 1 standard deviation up, 2, 3 standard deviations up, 1 standard deviation down, 2, 3 standard deviations down. Now here's a little trick I learned, or something I've noticed. When you're trading London session, we usually, not all the time, we are usually just using these 3 levels. If you want to sell, you're selling at the -1, -2, or -3 standard deviations. And if you're buying at 2, 3 and 4. That's a trick I found. So if this had to go to 3, and for the entry pattern that I'm going to show you in this video as well, I would like really load up. I would load up and know that it's going to be most likely going to below day open again, and I can have a really large range as a buffer, because once it passes midnight open, it usually stays down there in a trending day. So that's like 21 pips buffer, or let's just say 15 pips if I'm entering 7 pips away from the high. I've got a 15 pip buffer at any moment after midnight, or after London session opens, and that's really good for peace of mind. So for instance, let's actually go on what we're seeing now. I then mark out 2 to 5 o'clock window. The box isn't like this, it's just after the fact. I make my box like this. I usually have a box extended up to this 3 and down to this 4. So this is how my box would look. That's my time box, and I'm looking on a 15-minute chart for swing high to form at these levels. So at -1, -2, -3. You can see 2 horizontal lines. I'm just gonna hide them for now, and we can get back to them because those are my entry points. That was the time that I entered the trade, and I'll show you back on my funding pips dashboard as well. So right here, the only thing we're looking for right now on a 15-minute chart is for price to be above day open. So all of this area here, I'm looking only for sells. Oh, that didn't work. I'm looking only for sells. And all below this area here, I'm looking only for buys. It sounds kind of simple now, but it's really effective. If you go back in your charts and you look at this, just have your midnight opening price level set on that. You look above it. In London session, if price is above the high, or above midnight opening price, did we see a move down or did we see a continuation? Most of the time it will be a move down. Okay, now extending this box. Now we're gonna look for swing high forming at this point. I don't want it to form somewhere in the middle here. So between 1 and 2, I don't want that. That's murky. I don't like that. So you see there's one forming right here. I'm gonna make this one dark so that you guys can see. Dark orange, and there's another one. I don't know if you can see it with this chart. There's another one forming right there. So there's 2 points, 2 times it hit and created a swing high at this -1 level. Obviously we'd only see the first one while we're live trading and then wait for our pattern of entry. If we don't get the pattern of entry, we're waiting for either the second one or the next level to be hit, and then we're looking for our pattern of entry again. If there's no pattern of entry, don't consider the trade. Don't force it. Don't put any risk on that you don't need to put on. We are here to make money. We're not here to be fancy. Okay, and now with that being said, that's all we're doing in the 15-minute chart. 15-minute chart for now, we are done with. We are going into a 5-minute chart. And now we are looking for very specific things. And that specific thing is a fair value gap. So this right here is a fair value gap. A place where if you're selling, the first candle creates a low, right? The second candle goes through the low, and the third candle creates a high that doesn't meet the first candle's low. So that right there, fair value gap. So we've created this swing high at the level where we're expecting the high of the day to be. And I'm saying expecting because nothing is 100%. So this is what we're expecting. We're expecting that to be the high of the day. Now we're seeing our fair value gap. Now we want to see a move away and then a move back into, which we do see here. And then we're taking an entry off of this. That's all. That's it. Rinse and repeat after that. Rinse and repeat. Every single day you're looking for this exact thing. Rinse and repeat. I'll show you the entry I took. Go down to a 1-minute chart. So that's my 5-minute fair value gap. That's my swing high. And notice the bodies. It's not crossing that line. It's wicking through, but it's not crossing that. I'll go back into my funding pips dashboard. You can see this is 1158, 1.2665. So short position 1158, 1.266, 2665, 1.2665. So that's down here. So I took a position in here. Stop was above the high, above the swing high it was made. So that was 10 pips. And usually I have a stop like this, but if you're starting out, you should put it 3 pips above. So instead of a 10 pip stop, you'd have a 13 pip stop, and just adjust your lot size accordingly. And then for targets, now something I'm already noticing now. I've entered below day open. So I shouldn't be entering below day open. I should have waited another minute or two and then just taken the entry of the fair value gap and we're above day open. So that's something I should have considered while I was in the trade. Now my provisional targets would be this first, so it'd be 1 to 1.2. Now for me that's not enough of a R multiple. Then there was a 1 to 1.8 and a 1 to 2.45. I'll keep my target even lower than this, like around this level, 1 to 3. And as time went on, I entered another position. So this I had 1% on the position, and we'll look at my exit in a second. Let me actually look at my exit. 224 402. So 402 224, so that's right there. So I exited on a 1.9. Let me just make sure. Hey Bana, I must have entered higher and it's just the data that's busy confuffling me around. Okay. I know I took profit at this level. I'm trying to look at, so it is 11:58, which is that candle. Did I enter up higher? Let me just make sure. It was 2.45. So I entered at day open. Yeah. So that was my entry. That was my entry. Because it was a 2.45%. 2.4, sorry. Yes, that's what it was. 2.45%. And now you'll notice something inside here. There's a new swing high that's made, and it's made equal to this swing high. So this is what it's called double tops. When double tops happen in the market, you can trust them when they have narrative like this that I've outlined, and they are made outside of a time of importance. So for instance, if this exact thing was happening when we're in this gray box, like from 7 to 9, I'm expecting this high not to be held anymore. I'm expecting price to go through the high, and I'm either exiting the trade at that point or just waiting to get stopped out, and that's okay. It's just part of the game. So that's the first position. The second position I took like moments after. I took 4 minutes after actually. In fact, let's short position 02. So this is just above the 5-minute fair value gap. Ooh, I'm seeing an issue now. I know I had my stop. Wasn't that wide? Because I added a position and it was half. So that was a 5. Yeah, like this. And this one was at 10 at the moment. something like this. I'm not getting it precise. I think while I'm trading I should just add these things, so that if I'm coming to do my reviews it's much easier, because now I'm looking at time and things aren't lining up. So let's say I took my entry there, that's close enough. We got really close to the high of the day, or the high of the session, sorry, not the high of the day. This high was actually bludgeoned. It was bludgeoned later on. But this trade right here, if you look at my sizing, which is over here, my lots, you'll see it's the same size, but because the stop loss is much closer, it's actually less risk. So it's half the amount of risk. So with the initial trade I put on 1%, and then with this that I added another 0.5%. So in terms of risk, I was at 1.5% risk, and my target was obviously just to get the 5%. So that's a 1 to 5, that's 2.7%, and then this would be another 2.7%. So that was my target, and it hit. Boom. And here's something actually super crazy. I'll go back into the 5-minute chart. Now there's just something additional. I'm gonna have to probably clear a lot of stuff now. No, I don't. Okay, I don't. So you see this high. Let's actually, let's clear a lot of stuff. I'm not gonna clear that one. I'm gonna clear this. I'm gonna clear the red and green boxes. I'm gonna clear take profit, stop loss. Hey, what are you doing? Okay, there we go. So you see the swing high that's made right before the high of the session that's made into this projection level. So I'll take that. This is now a breaker. So I'll take that swing high down to the swing low, the lowest low. I'll put on my possible turning points. So I'm looking at one down, 2 down, and 2.5 down as the low of the session or the low of the day, and then 4 down. So those are my 4 points I'm looking at as low of the day or low of the session. You can see it just ran through 4 now, but this 2.5 was actually like an important turning point or important swing low, because you see the swing low is made after that, is made, and the swing low is made after it is made, and it's made a similar pattern to this high, low, higher high, lower low. So now you get a low, high, lower low, higher high up here. So that's a similar pattern, just in reverse. So I could put the same thing I'm showing you now, just for completeness sake. I'll put this on this low to this high, and you see it almost hits this 4, just comes short of it. And that's because we have the pivot level here that has more importance, or I don't know if it's the pivot level but the projection level that has quote unquote more importance. So it will come almost to that 4. If this level was a bit higher or didn't have that significance, it would actually go to the 4 and then return back down. But the difference between that, the high of this candle comes in at 818 and this is 840. So it's 3 pips difference, which is proper insane. 3 pips. So I could have been in here inside of this area and gotten out almost exactly at the high, just using this idea. So with that's where I took profit. That's the reason I took profit. There was a 2.5 overlapping with the 3. The 4 is super close to the 5, but I wasn't too confident in it, and I just took profit there. Also, at the time, my account hit the amount that was needed, the 5.4%. So there was no need for me to still hold on and risk anything else. With that being said, guys, I hope you enjoyed this video. I hope you found it insightful. If there's any questions, please do comment below. I'm trying to get through all the comments, but just this funding thing is working on my nerves. I just want to get funded because I've got the skills. I just want to get the funding now. It's currently under review. Receive update in the next 2 working days. So that's literally tomorrow, which is Friday, and then I don't know if they count Saturday because I don't know where this company is based. If they count Saturday as a working day, because certain countries around the world do count. I don't know exactly which ones, but I'm sure I read somewhere that they count Saturdays as working days. So it's most likely going to be tomorrow and Monday, and I'll be back on with the funding pips phase 3 account on Tuesday. If you enjoyed the video, leave a like, leave a comment, and sheesh, this market is running lower. Also, if you guys track back all the way to my first initial video trading this account, you'll see I mentioned something about seasonal tendencies and how we're going to be selling more or selling bigger size, so having much larger down days than up days, or having more down days than up days during this month until I would say about the 7th of March. And with that being said, guys, I'll see you in a bit. Cheers, bye.